The tech job engine continues to change the Silicon Valley landscape. In order to facilitate all of this expansion, we need to begin building for the next tech migration. Let's speak with the thought leaders who are betting on the future of Silicon Valley. Silicon Valley Opportunity Zone Q&A Series.
Hi, I'm Jimmy Atkinson, founder of the Opportunity Zones database at OpportunityDB.com. And today I'm joined by Erik Hayden, founder of Urban Catalyst. And we're going to discuss today Opportunity Zones and Erik's latest Opportunity Zone fund. So Erik, to start us off, could you tell us a little bit about Urban Catalyst? You just closed Fund 1 at the end of last year. And beginning of this year, you just launched Fund 2. So tell us a little bit about what you're up to.
Sure. So in Fund 1, we raised $131 million over 2 years. We had over 350 investors. We're using those funds to do 6 projects here in downtown San Jose. Those are ground-up real estate development projects. You're right. In February of 2021, we launched our second fund. It's a $200 million fundraise. It's also for ground-up real estate development projects in downtown San Jose. In fact, it's 2 projects. One is called Icon and the other is called Echo. You know, we're planning on starting construction on all 6 of our projects in Fund 1 within the next 8 months. In fact, we start on our first project here in a couple of weeks.
Fantastic. And so you are focused exclusively in downtown San Jose. We're sitting in your offices in downtown San Jose right now, and all of the projects that you're doing, both for Fund 1 and Fund 2, are located in downtown San Jose. Tell us what sets downtown San Jose's opportunity zones apart from other opportunity zones around the country.
You know, it's interesting, Jimmy. When I formed Urban Catalyst in 2018, my plan was to form a real estate equity fund to focus on doing ground-up development in the downtown area. And that was mainly because of the overall macroeconomic trends throughout Silicon Valley, all pointing towards downtown as the next place to do development on a large scale. And it was only after I started forming Urban Catalyst that I even learned about the Opportunity Zone program, and that everywhere that I was planning on building these buildings was already located in the zone. You know, we are developers and fund managers. We have a lot of experience building projects in Silicon Valley and specifically in downtown San Jose. So it makes a lot of sense for us to focus on the areas where we're experts at development. There's a lot of opportunity here in San Jose in the downtown area. And of course, having Silicon Valley as your market, one of the best markets in the country, is it's really good at the risk mitigation as far as market risk is associated with building new buildings.
Mm-hmm. So you successfully closed Fund 1. You actually were oversubscribed for that first fund, I believe. And now Fund 2 is open and it's focused on 2 adjacent projects, Icon/Echo. Tell us about that one.
So we were able to acquire almost half of an entire downtown San Jose city block. So a little over 2 acres worth of property. And we're building the 2 high-rises right next door to each other. The office portion, which is Icon, is a 420,000 square foot office building. Echo is the residential portion. It is a 300 unit residential project. And really the synergy between those buildings is what is important, because we have such a large space as far as the total acreage. We're able to really create construction efficiencies that reduce our construction costs and really help the overall project succeed.
Okay, so Erik, you mentioned the macroeconomic trends happening here in downtown San Jose. Google is moving to downtown San Jose, a huge campus that they're going to unveil over the next several years. What are they doing here exactly? Can you tell us a little bit more about what Google's plans are for their mega campus?
We've been calling it the mega campus, and the reason we call it that is because at build out, it'll be Google's largest campus on earth. They've acquired over 80 acres worth of property, and that is, they've spent more than $450 million on land acquisition. Their plans that were approved at the San Jose City Council in July of 2021 show them building roughly 7 million square feet of office and 6,000 residential units. This is going to be one of the largest projects in San Jose history, and it's going to be happening starting in about a year. It's pretty exciting.
Yeah, no, it sounds incredible. I'm very curious to see what it's going to look like in when's that going to be complete? About 10 years or so from now?
They're showing a 10-year build out. You know, one of the interesting things about the design of the campus, by the way, the design hasn't been released. They've just showed in general what the land uses they want. Mm-hmm. But some of the insiders I know have seen the design and they say the closest that we can say that it resembles is Star Trek.
That'll be impressive.
It will be.
Yeah, so let's focus now on some of macro trends in San Jose and the state of California at large, some headwinds that you may be facing potentially. There's been a lot of headlines in the news media over the last several months and years about this mass exodus from the state of California. Can you address that? What's happening with the state of California? Are people fleeing in droves? Are they moving to Arizona and Texas and other places? Or what do you see exactly?
For years and years and years, decades over decade, people have moved out of California, but overall, the population has increased. We're up to over 40 million people in California now. While the mass exodus really was overblown as far as its news reports, and we've seen a lot of retractions. In fact, the New York Times just came out and said mass exodus from California was a myth. So we know that it really was overblown. Maybe the big news is that we lost population for the first time in 100 years, but the stats are out. We lost 187,000 people. That's less than 1/2% of the California population. So really not seeing a huge mass exodus. Now here in the Bay Area is a little different. The big story really should have been people leaving the city of San Francisco, because that was a huge exodus. But most of the people that left San Francisco, they just moved to other parts of the Bay Area. Some reports even show San Jose gaining 20,000 people during the quote-unquote mass exodus.
Very interesting. So another trend I want you to tackle for us today is a lot of your projects, both in Fund 1 and Fund 2, are building office space. You're building hundreds and hundreds of thousands of square feet of office space. Does that ever concern you that you're building so much office space when it seems like the trend lately, pandemic induced, as of, let's say March 2020, has been more working from home, less commuting into the office? Do you see that being a long-term trend, people not returning to the office or not having 5 days a week in the office? Address that for me.
Sure, and by the way, this is one of the most common questions that our potential investors ask us about. And it is, will people work from home forever? And I think what we're seeing now that people are getting vaccinated, it really has become more of a, most of the large companies are requiring their workers to come back to the office. They're starting off kind of soft pedaling it with a come in 3 days a week starting in September of 2021. Around here, it's interesting. Most of the big companies, they really want their employees to come back, but because the demand for tech talent is always really fiercely competitive here in Silicon Valley, a lot of the employees are saying, well, we'll just go find a new job where I get to work from home for longer. So we're seeing, I think the stat is 38% of employees in Silicon Valley are open to finding a new job. So Google, like the leader of office space here in the Valley, they initially came out and said, everybody's coming back. And then after the reaction they got from their employees, they said, kind of like, just kidding, you only have to come back on a limited basis to start. But from what I hear from my friends that work at Google and some of the Google managers, they really want their employees back in, and they're kind of saying, we really would like it if you came in. So they're not requiring it, but they're kind of making a point of it.
But in the long term, even the midterm, let's say the next 2 or 3 years, just look out that far even. Are people still going to be working from home primarily, or do you think by then what's going to be happening?
I think most folks will be back in the office. I mean, if 4% of people work from home prior to the pandemic, that percentage is probably going to increase. Is it going to be 10%, 20%? It's probably not even that high. I think we're going to go back to a society that is much more normal than a lot of people thought during the pandemic itself. But Jimmy, I'll tell you, when we planned our office space for Fund 2, so we have 420,000 square feet of office in Fund 2, we planned that during the middle of the pandemic. The Silicon Valley office market is very strong, and throughout the pandemic, the companies here were some of the most resilient. They led the stock market rebound throughout 2020. We found that not a lot of new office leasing occurred. And because of that, these companies who continued to hire people, it generated this huge amount of pent-up demand. So even though they will have a higher percentage of work from home, they have more employees now. Some folks will tell you they want to do more social distancing, and that's going to require more office space. I don't know if that's actually going to be the case, but really the demand for office in Silicon Valley is driven by the Silicon Valley job engine, and the Silicon Valley job engine is strong and remains strong.
One more challenging headwind that your fund faces is the very fact that you're located in California. California has a lot of good things going for it. It's the tech center, Silicon Valley. But one challenging part about being in California is the tax situation. The Opportunity Zone tax incentive is a federal tax incentive. The vast majority of states around the country either do not have a capital gains tax rate, or the state has actively decided to conform to the federal policy. California, unfortunately, is one of a handful of states that has not conformed to the OZ incentive, meaning that people who invest in California-based funds or have nexus in California are still going to have California capital gains tax liabilities at the end of their Opportunity Zone investment. So Erik, how do you address that concern with potential investors?
So that's another common question that we get. And it really goes down to the fact that Opportunity Zone funds like ours, we're a real estate fund. It's really the real estate that matters. You want to know what market you're in, what type of projects you're building, and who the developers are that are building those projects. We really see ourselves as this solid, fundamental real estate equity fund and development company, and we see the Opportunity Zone tax benefits really as just the icing on the cake for our investors. Now, California, at the end of the day, they have a 13% capital gains tax rate. So when we sell our buildings at the end of 10 years, out-of-state investors are going to have to pay that 13%. Now, if you look at just the thought of the biggest benefit you get in this program is that after 10 years, you get tax-free profits from the fund itself. There better be profits from the fund, or really what's the point of the whole program?
Right.
You can't get tax-free profits if there's no profits. So when you think about the projects, you really have to think about the market and who is doing the projects, because that's what matters. I personally lobbied the governor's office to conform with the federal Opportunity Zone rules and regulations, and they were very resistant. In 2020, I wrote a really nasty letter to Gavin Newsom that was published in the Sacramento Business Journal. You wouldn't believe it, he didn't respond.
Unbelievable.
Unbelievable.
Okay, so let's shift now to talking about tax rate risk, because as an Opportunity Zone investor, you get to defer recognition of your initial capital gain until the end of 2026. But the big question is, okay, well, what's the tax rate going to be in 2026? And Joe Biden's been in office now for several months, and there's rumors swirling and some signals out of the White House that capital gains tax rates may go up, in fact, possibly way up into the low 40s. What does that uncertainty or that potential tax rate hike or risk of a tax rate hike, what is that doing for the Opportunity Zone marketplace? What are you hearing from your investors?
Well, we hear quite a bit about this. In fact, it's, the uncertainty surrounding future tax changes causes confusion. To investors, confusion equals risk. Investments into Opportunity Zone funds, you have to have a capital gains event. It includes both short-term and long-term capital gains events. Short-term capital gains events are already a pretty high tax rate. Long-term is really what we're talking about, the major increase. There's a lot of scenarios out there, as in if the tax rate does go up, you do have to pay your taxes in 2027 at the 2026 year tax rate. If you invest this year, you get that 10% reduction, somewhat of a hedge against future tax increases. Biden could increase the tax rates this year and he could get voted out of office from 3 years, and a Republican could come in, or another Democrat, and reduce tax rates again. So it's hard to say exactly what the tax rates will be in 2026. If the Opportunity Zone or if the capital gains tax rates do increase, it actually makes our program more beneficial, because then at the end of 10 years, when you get tax-free profits, you're not paying an even larger percentage in taxes. But that means you also have to make the assumption that the tax rate in 2027 is going to be the same tax rate in 2034 when we plan on selling our properties in Fund 2. So it's a lot of different scenarios out there. I kind of go back to what we were talking about earlier, which is we're a real estate equity fund. It's the tax benefits are the icing on the cake. It's about the projects themselves. We have great projects. We're in a great market. We're an all-star team of downtown San Jose developers. And that's really what matters. And really, investors should think of it as, well, I wanted to diversify my portfolio. I had a capital gains event. I wanted to invest in real estate. There are tax benefits associated with this program, especially for investors that their tax event is the sale of stock. There's never really been a safe harbor for them before to invest into real estate and not have to pay taxes, or at least have a deferral and a reduction. So for those folks, yes, they're going to get the tax benefits associated with our program, whatever they may be, and they're going to be better than no tax benefits at all.
Yeah, that's a really good point. And we still are a little bit too far removed from that future date, that end 2026. We don't know what the tax rate is going to be in 2026. We don't even know what the tax rate is going to be next year, potentially, right? So that's a good point you bring up. At the end of the day, it's all about the underlying assets that you're investing in.
It is.
So Erik, tell me, who invests in your fund, the Urban Catalyst Opportunity Zone Fund? What type of persona is he or she typically?
Sure. So in our first fund, over 85% of our investors, their capital gains event was the sale of stock. And that's really because there never has been a safe harbor for the sale of stock. And the two personas that we see the most, the first is Silicon Valley employee of one of the large tech companies, maybe Facebook or Google, Uber. We have investors from all of those companies. Their net worth is primarily tied up in shares of the stock at the company where they work and their primary residence. They've always known that they're supposed to diversify their portfolio. Having 100% of your portfolio tied up in one or two stocks is never a good idea. And they always wanted to get into real estate, but they never wanted to take the tax hit in order to reinvest into something else. Because it takes a lot after you pay, 30% to get your investment back. So they see Opportunity Zone funds as that way to diversify. And by the way, that's the point of the whole Opportunity Zone program, is to take that money off the sideline and put it to good use.
Out of the stock market and into real estate or small operating businesses in these opportunity zones, in these low-income census tracts.
That's right. And our other persona that we see a lot of really since March of 2020, since the stock market bottomed out, is we see a lot of folks that are day traders, or they just have massive amounts of gains because they had a large stock portfolio. We see a lot of short-term capital gains from them, so they're really in need of some type of tax advantage. And that's really our second most common type of investor.
Any Bitcoin investors?
We have had a couple of Bitcoin investors. We just did a white paper on Bitcoin that went out in one of our blog posts, because yes, cryptocurrency, the sale of cryptocurrency is a capital gains event, and they could all benefit from the Opportunity Zone program as long as they learned about it and understood it.
So Erik, for investors or potential investors watching or listening to this right now, what advice would you give them when they're assessing their different options for investing capital gains into qualified opportunity funds? What should they look for in a qualified opportunity fund? What questions should they be asking?
The majority of Opportunity Zone funds out there are based around real estate, either real estate development or real estate renovation. Here at Urban Catalyst, we do both. The first thing they need to figure out is, where are these projects located in which I want to invest? What is the market and what asset classes are those properties? And maybe even more important is, who are the developers that are building the projects? Here at Urban Catalyst, we're not just the fund manager, but we're also the developers. Because having local expertise in the area where the developments are occurring is really the fundamental thing that you need to have a successful development project. Another important thing that every investor that wants to invest into Opportunity Zone funds should ask about is the fees associated with that fund. Here at Urban Catalyst, we have two different fee structures. One is the fund level fees, and the other is the developer level fees. And why this is important is because our fund fees are very typical, and if you look across the spectrum of all the Opportunity Zone funds, that's what you're going to see. But because we're also the developers, you get to see all of our developer fees. And that's great, because most of the time when you look at all these other funds, they're just fund managers. And yes, they're partnering with developers, and yes, they're paying those developer fees, but you don't get to see what they are. So we have some of the additional transparency here at Urban Catalyst when it comes to our fee structure.
You've been a partner on my OZ pitch day now 3 times, and I think each time was a success for you. You've raised quite a bit of capital as a direct result of being able to pitch to a large group of investors that were attending either live or watch the recordings later. What did you like about my OZ pitch day events?
Well, first, Jimmy, I like you.
Thank you.
I like your podcasts. You have really become the true expert in the Opportunity Zone space. And we find that a lot of our investors, even ones that didn't see us on your pitch day, they still listen to your podcasts. Now, your pitch day specifically has been a huge success at Urban Catalyst. And it seems that every time we do it, we want to do more advertising with you, have more email blasts with you, because every time that we have more exposure to your platform, we have more exposure to investors that are coming into Urban Catalyst. We successfully have a number of investors, I'm talking millions of dollars worth of investment into our fund that we can directly attribute to your pitch day.
That's fantastic, isn't it?
It is fantastic. Yeah. Jimmy, you've been doing your podcast since mid-2018, really focusing on opportunity zones and this program. Can you tell me a little bit about the evolution of the program? How did it start and how did we get to where we are now?
Yeah, so the Opportunity Zone tax incentive really hit the scene in the end of 2017. It was packaged into Trump's Tax Cuts and Jobs Act. And the zones themselves were then finalized in the middle of 2018. And that's about when I came on the scene with my platform, OpportunityDB.com, and later my podcast, the Opportunity Zones podcast. And there was a lot of uncertainty about the program when it was first enacted and when the zones themselves were first established.
Wasn't the original legislation only like 6 pages?
Yeah, the original legislation was only a few pages. It was buried in this huge tax code bill. And the IRS and the Treasury Department took a very long time to get regulatory guidance out around the program. They came out in 3 tranches over the course of, I think it took literally 2 years from the date that the bill was signed into law until the final regulations came out. So during that entire period of time in 2018 and all of 2019, essentially to the end of 2019, when the final regulations came out, there was a lot of uncertainty in the marketplace. There's a lot of uncertainty with investors about what the program was. There was a lot of uncertainty with fund managers in terms of how they could comply with the program. And then finally, we get the final regulations in 2019, and now it's, okay, now we're gonna hit the ground running going into 2020. Everything's smooth sailing with opportunity zone investing, and then we get to March, and the stock market bottoms out. We have the COVID pandemic, and it really stalled the marketplace considerably for several months. And I feel like now in 2021, as we're kind of coming into the second half of 2021 and rounding the corner toward the end of 2021 here, we're hitting the home stretch. I think we've seen more capital raising activity happen as a result of coming out of the pandemic, and the fact that we also have this incentive, part of the incentive is expiring at the end of this year, that 10% basis step up that gets a reduction in the capital gains recognition amount. That expires at the end of this year. I think we've got quite a few tailwinds at our back in terms of capital raising and general marketplace trends for opportunity zone investors.
It's very similar to what we've seen at Urban Catalyst. When each one of those 3 rounds of clarifications came out as a part of the program, we would do a little dance here in the office because the program would get so much clearer. But it really didn't get finalized, like you said, until December of 2019. And before that, that confusion that you talked about, confusion in how fund managers are going to manage the program itself, and is the program clear? That confusion that investors felt about the program, in their mind, confusion equaled risk.
And it creates a lot of hesitancy with investors also. And I think a lot of those fears, those risks have been alleviated now. We've got the final regs. We're coming out of the pandemic. The market's turning up.
Our fundraising,
the economy's turning up.
Yeah, our fundraising is really seeing that increase starting to happen now too. Do you think that over the next year we're going to see like a massive increase? I mean, overall, when the program initially came out, Mnuchin said there's going to be $100 billion that goes into the Opportunity Zone program. I mean, as best as we can tell, and it's only been around 25 to 30 billion over the first several years of the program. Is the program going to reach its potential?
I think it will eventually. I think it got off to a slower start than anybody would have expected or would have liked to have seen. I think the IRS regulatory process took a lot longer than everybody wanted it to, right? I think they wanted to get it right. They wanted to focus on it and make sure that they didn't screw it up. And I think at the end of the day, they did a really nice job with the regulations, but it did take a really long time. I think we're at this place now where, yes, I do agree with you. I do think we're gonna hit that number. I think every day that goes by, I see more interest in the program. I see more investors who are kind of turning on to the program and becoming aware of the program. I still have to explain the very basics of the program to people all the time. It's like and the more I do that, and the more you do that, I'm sure at Urban Catalyst here, the more you're educating the investor class, and not just the investors themselves, but the wealth advisors, the RIAs, the broker dealers, about the program and the benefits and why it's so advantageous to be able to take a little bit of money out of the stock market or out of a small business, whatever the case may be, where you have some capital gains locked up, and diversify into an opportunity zone type investment, which is typically real estate. So yeah, I do see the market continuing to trend in an upward direction. So Erik, it's been great chatting opportunity zones with you today. Thanks for joining me. Before we go, can you tell our viewers and our listeners where they can go to learn more about Urban Catalyst?
Sure. To learn more, visit urbancatalyst.com.
Okay, Erik, there's a little bit of buzz around the office here the last few minutes because apparently a wire just came in. You just got another investment from an investor. Is it time to go ring the gong?
It sure is, Jimmy.
And then after that, I'm going to beat you in foosball.
You're on.
All right, let's do it.
All right, this is to celebrate another $300,000 investment into Urban Catalyst Fund 2. We hit the gong.
I'm not going to take it easy on you, Jimmy.